Balaji, on March 17th, predicted that Bitcoin will reach $1 million in 90 days due to U.S. hyperinflation. Hyperinflation is defined as prices going up 50% month over month, just so we're clear on exactly how dramatic that is. Balaji sort of inserted Bitcoin into that bet. It wasn't a Bitcoin bet then, and I think he's done 2 of these bets. So he's betting $2 million in total on Bitcoin hitting $1 million by June 17th.
The recent prediction by Balaji that Bitcoin will reach $1 million in 90 days due to hyperinflation caused by the US printing massive amounts of money and cutting rates. While the Jason Calacanis agrees that US may print more money and cut rates, they disagree with the prediction of hyperinflation leading to Bitcoin's rise. He also notes that Balaji is believed to be heavily invested in Bitcoin, but refuses to confirm. The David Sachs discusses the current financial crisis, which they believe has 3 phases, including a banking crisis with unrealized losses, a credit crunch, and a government debt crisis, which could lead to a spike in borrowing costs at the federal level and involve sovereign debt issues internationally. He disagrees with Balaji's prediction of $1 million Bitcoin in 90 days and believes it could play out over the next couple of years. Additionally, David Friedberg notes that while they generally support Bitcoin's independent storage system, it may not be accessible enough or easily transacted, and some governments are taking action against cryptocurrencies. Here's more of what they said.
Bitcoin was trading at 26,000 at the time. It's now trading at over 28,000. He believes regional banks are insolvent. He thinks the Fed is going to need to print a massive amount of money, like we've said here, do more QE, and then cut rates. It all seems reasonable, but that will lead to hyperinflation. We just printed that. Yeah. They're going to cut rates. They're going to eventually cut rates, and there'll be more QE. So that part is reasonable. Just that one little piece. But then he believes is the part that is kind of out there, that hyperinflation is going to devalue the dollar, and this is the time. I asked him this a bunch of times, and he would not be honest about it or didn't want to answer my question. I said, hey, what percentage are you in Bitcoin? Somebody says he's 99% in Bitcoin. He will not confirm. And so I was like, well, if you own 1,000 Bitcoins, if this goes up, a very small amount, 4 or 5%, you're going to pay for the bets. And just to add to it, he says you have to leave the United States and get to Singapore or a place, or if you're going to stay in the United States, you need to get to Wyoming or Texas or somewhere that explicitly allows Bitcoin, because the closer you are to the United States banking system, what happened to Silicon Valley Bank on that fateful weekend where people couldn't get their cash and we're going to have to, miss payroll? He says that's the dry run for the entire U.S. banking system.
I don't think you can disparage Balaji, because someone who cries wolf says this repeatedly and makes a dire prediction repeatedly and is wrong. And we can't say yet that Balaji is wrong. Do I think that we're going to have $1 million Bitcoin in 90 days? I personally find that very unlikely, but you can't say yet. He stuck his neck out making a prediction that will be easily falsified if he's wrong. Second, the last time that Balaji made a dire prediction was COVID. So you can't say that this is just like a doomer who throws out crazy predictions and is always wrong. He's actually pretty selective about his. If you think about this spike in interest rates that we've had, and that Chamath thinks will actually continue quite a bit longer, there are 3 main effects that it indisputably has. Number 1, undercuts the value of long-dated bonds. Number 2, it's made lending much more expensive, particularly for big purchases like real estate. Number 3, it's increased government lending costs. Okay, now, play that through the financial system. What does that mean? Well, if the value of long-dated bonds has sharply decreased, well, that's led to this banking crisis with the unrealized losses. That's already happened. Number 2, it's made lending more expensive, the credit crunch and CRE. We're beginning to see that. And I believe that's going to play out as the second crisis of this larger financial crisis. And then number 3 is the increase in government borrowing costs. That will eventually play out in terms of being a government debt crisis of some kind. And I think it'll involve, a spike in borrowing costs at the federal level and involve sovereign debt issues internationally. I think it'll involve budget deficits at states and cities. So I think there's 3 phases to this financial crisis. We're in phase 1, and I think CRE and government debt are the next 2 phases. And I think a lot of that lines up with what Balaji thinks. Where I disagree with him is I don't think we can know what's going to happen in 90 days. I think that the CRE crisis is highly deflationary. It's going to create distress everywhere in the economy. That is going to lead to a massive reduction in liquidity. I think that the government debt crisis, assuming the government wants to inflate and monetize the debt as a way to solve that problem, that will be highly inflationary. But when these things play out, we can't know. I think that's what makes this really hard is I think jumping all the way to the sort of finish line and saying we're going to have $1 million Bitcoin in 90 days because the US dollar is worthless, I think that's premature. I think this could play out over the next couple of years.
We have a real problem if Bitcoin is the exit ramp for an inflationary crisis because it's not accessible enough. It's not easily transactable for folks. I'm sorry to be negative to the Bitcoin maximalists. I'm generally in favor of this kind of independent storage system that's outside of government and state control. I think there's just this unfortunate reality. I mean, we saw with the Wells notice to Coinbase today. They just arrested that crypto guy. I do think that one of the reasons we're seeing the market move the way it does is because folks are shifting their risk assets around quite a bit right now to figure out where is a good place to put money.
If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million. There's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right. And that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book. And the best example to demonstrate this is in all of this chaos, if Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail and they're just day trading this thing. How else do you explain an asset that is not absolutely ripped in the face of all of this terrible news about the financial system? And I think the answer is because it's still a cul-de-sac of users. It's not broadly available, not broadly adoptable, not broadly used. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011. 2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that cause the financial infrastructure and the world to work properly, and we are just starting to uncover how they're broken. So I think we need to focus our energy on that and dial down a little bit of the Bitcoin maxi stuff because it distracts from a really important set of topics that are more inclusive and actually touch 7 billion people.